With the Russia-Ukraine conflict continuing into its second month, many investors trying to understand the implications on sectors beyond the energy space. Let's lock in on the impact to the internet sector with Oppenheimer analyst Jason Helfstein. Jason, always good to see you here. If Europe does in fact enter a recession, what does that mean to the likes of a Google?
We have looked at it broadly, how to think about it, and it really has to do with the amount of initially Russian energy that gets imported, and you can kind of look country by country, right? Germany is the largest importer, but if we look at advertising, digital advertising was forecast previously to grow about 10% based on some of the major ad agencies, based on something like GDP, up 7.5%. Historically, when you have recessions, advertising as a percent of GDP shrinks, right? Because it is actually a way to kind of protect margin for companies. So we think broadly, if GDP in Europe was to slow to 1 to 2%, which I think some economists are now forecasting, advertising could be down 5%. What that would mean for an Alphabet specifically, we think they get about 30% of their advertising revenue out of Europe. So if you apply kind of that sensitivity, you could potentially see, basically a 5% hit to their ad revenue. If that's probably within the advertising kind of universe, probably the worst, kind of the company with the most exposure or the most risk to it.
Hey, Jason, it's Julie here. I'm curious what you think about that combined with sort of regulatorily what's happening in Europe. I mean, does that also, do you think they're going to end up taking a revenue hit from some of the expected changes there? Or do you think that it's mostly confined to what's happening on a broader economic basis in Europe?
Look, we're already seeing moves where they're willing to capitulate on some of these app store fees. It's not surprising that they're starting with companies who have subscription businesses. They already kind of had more attractive payment terms, for businesses that were over 12 months. And they already kind of were rehearsing workarounds with, again, some of the more prominent companies such as Match, and obviously Spotify is their beta on this new project. So there is an impact, as far as when we think about the overall value of Google. I mean, if we think Google's worth something like, an enterprise value before cash of 2.1 trillion, Google Play and hardware is maybe 32 billion of it. So it's pretty small. We don't really see that as a long-term headwind, and we think they've been preparing for it.
Jason, you also cover Uber, and I'm of the opinion that their announcement last week that they'll be working with taxi companies in New York is a big deal. Do you see it as a big deal, and what does it mean to its competitor Lyft?
It's a few things. Number one, I think it clearly acknowledges that their biggest issue is supply, and meaning driver supply. And so while they are doing a better job than Lyft, according to metrics we track in the first quarter as far as kind of onboarding and driver downloads, it's still not enough, right? I mean, I think everybody acknowledges the prices are elevated. The wait times are not that bad, maybe more than we were used to, but the prices are definitely high. And if you think about it, once upon a time, UberX was, at the same or less than a taxi, and it was perceived to be a better experience. And now it's meaningfully more expensive. And so, clearly consumers want to hail with an app and, take the uncertainty of standing there in the street with your arm in the air. So, can you solve basically two issues, which you help the taxi industry, which, is basically going through kind of a reboot after COVID, and it's been widely reported what's happened with taxi medallion prices. And so, look, I think it's very symbiotic. I think if you look outside the U.S., there are plenty of markets where Uber actually started with taxis, where there wasn't kind of a robust black car market to start with. And there may have been kind of regulatory issues to bringing people driving their own cars, right, which was the UberX model. And so, look, in New York, UberX is a quasi-regulated business anyway, right? You need a TLC license. There's minimum wages. So it's a lot more like the taxi business, albeit there's no standards on Uber sets of standards of what kind of car you can drive, right? where TLC sets the standards on what a taxi is. So look, I think it's going to be a win-win. I would imagine that Lyft will be able to join the program. Uber has a much more robust technology R&D budget than Lyft does, so it makes sense to me that the two vendors who provide the technology that's in taxis would integrate with Uber first. But my guess is once it's built out, that Lyft will join the program as well.
And just really quickly, Jason, in like 30 seconds, Uber's had an issue with driver relations, if you will. Does getting taxis on the platform hurt those relations at all?
I feel like it's been less of an issue. I do think they've been trying to be super supportive of drivers during the pandemic. Drivers are making more money because, again, it's a take rate business. So if they're charging more, the drivers are getting more. Now, the question is, are the drivers, busy throughout the day, during all times of day, right? Because rates move around based on supply and demand. So look, I do think at the end of the day, there needs to be incentive. If you bring a nicer, car on the platform, you should charge more for it, right? And you can make an argument that because rates haven't really reflected per se service levels and they've been more a function of just raw supply and demand, there's actually less incentive to join Uber as a platform with a nicer car, a newer car. We all know that there's issues getting cars today, getting used cars, the inflation in cars, and then you have gas prices, right? So I think there's a lot of factors going on, and I do think that just, I think the whole ecosystem gets better integrating taxis, and again, supportive of their, goal of bringing every global taxi online by 2025.
Yeah, Jason, I'm on a real hot streak of finding some really bad Uber cars. So hopefully my luck changes. Oppenheimer analyst Jason Helfstein, good to see you.